All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is February the 9th or February the 10th, 2025, year of our Lord. And today we'll be reviewing the Dow Jones, the S&P 500, as well as the Nas crack, is what I like to call it. Today was pretty bonkers, man, to be honest. Like if we're looking at the day, I mean, the rally started inside of the Tokyo session, and it left the New York traders with basically crumbs. If you were trading the Dow Jones, we had an opportunity to go short, which is what I was looking for to go short. But my son was sick, so I missed the short opportunity. So I ended up taking the longs later in the day. End of the day, green pretty nicely. I'll go over some of the trades I took even before the New York session. I took a couple trades on gold as well. You guys can see those in the shop trade ideas. Um, One thing I'll say about today is whenever you see expansion, right? You guys watch that Wyckoff video that I always talk about. You got consolidation, accumulation, reaccumulation, and then this distribution, right? Distribution or expansion, right? Whenever you see aggressive expansion like this inside of one session and there's no pullback or consolidation period, it's a high probability that the New York session is probably just going to consolidate, right? And I tried to get everybody prepared for that today, and I think we did a really good job because I don't think anybody like had a bad day or anything like that. So just be aware of market conditions. What that means for me is one, maybe two trades inside of New York. And if PM session offers another trade, I'll take that. But other than that, I'm already got my radars up of do nothing mode, right? So inside of trading, one of the things you gotta master is you gotta master the art of doing nothing, right? Sometimes doing nothing is the best thing to do, right? And when you can master that art, you can save yourself from getting straight nuked. Because I can tell you right now, just looking at this price action, these are days that I normally get straight nuked. But I didn't today because I already had a plan, right? All right, so our range, we were looking for 44,635 through 44,551 to hold. It did, right? Price basically stayed at the highs all day. The low was 44,771 through 44,384. We did dip back into the lows. So we were looking to long the lows, short the highs. That's exactly what the market did all day, right? The minute we tried to peek our little head above the high, brought our ass right back into this range, right? Essentially, I was looking for in-wall bullish or this little pink box bullish. Never happened. This blue box, I was looking to be bearish. Never happened. But think about why it didn't happen, right? The average movement on the Dow Jones, right, per day is roughly about 0.96, maybe 1%. By 9 o'clock, we were already up 1.4%. And the market was still very bullish. So if the market wasn't going to sell back down, we had already met our data's quota on the day. That's how I knew, like, okay, consolidation is probably the next step, right? Like, what's the most logical thing for the market to do? It's consolidate, all right? So let's come down to the lower time frames, and I'll kind of walk you guys through some of the losses I took, because I did take some losses today. I think it's more important to talk about those than the actual wins. So I'll discuss what I saw, and then I'll get to the actual price action. So my thought process when I came into the market, I came into the market about 5:50 in the morning. I completely ignored all of this consolidation. 250 bringing the low of London, London sweeping London and midnight price, us trading down into 350 and pushing up higher. Instead, I said, you know what? I want to be a bear. So if I'm going to be a bear, I'm getting short inside of the 550 macro, right? So 550 macro pushes down to go up. My thought process was I wanted to trade up so I can go down. So you can't force the market to do something that it's just not doing, right? So I got short, got stopped out at 602 for about 40 points. Then I got short again inside of this candle here at 612. Much better entry. I did, instead of taking profits, let all 40 points of this come all the way back against me. So I took two losses inside of the London session. My thought process was that's fine. I'll just take the short inside of New York. So I wanted to see the market trade up into 930 and then go for the short straight down. That happened, but like I said earlier, my son was sick. So right when this candle was opening, he started screaming. Like I told the Discord, I gotta go. I was gonna take him to the emergency room, but I got his fever down. He had a really high fever. He was just screaming, you know, like, daddy, daddy, daddy. And it was like, man, should I take these 300 points or should I go be a dad? Right? It was a really tough decision. I'm just kidding. I'm just kidding. But so yeah, I missed this move here. This was like the real move, the short that I was looking for the whole time, right? And I had this lined up inside of New York. I had just discussed it with Trading Yoga Girl. I said the closer we get to this resistance zone, I definitely want to look for shorts, right? We ended up tapping right above this high here at 735. I think we melted down almost 300 handles. It was like a 300-point move. So when I came back, this whole move was done. So I ended up taking the longs instead. I got long down here at I think I got long off London. Yeah, right here. 486 was my entry. I took longs. I was in 3 contracts or 2 contracts. I cut off one for 100 points. Then I trailed one for 72 points. I was basically done. I locked out until about 10:30, 11 o'clock my time. I came back to the market and I took longs down here. Where did I get long? Oh yeah. I got long 445. 446 is where my entry was. And then I rolled these up. I was in 3 contracts, so I got out of 2. I got out of 1 at this high, and I got out of the other 2 up here. Well, I got out of 1 up here, and I held the runner, and the market was just wasn't doing what I wanted to do. So on this pushback down, I got out of the runner, and I was done for the day. I locked out at that point. So the PM session didn't really set up inside of 1 o'clock. It did, but when I saw it down here at these lows, if I'm going to trade PM session, if I see 1230 come up, I'm going to get it while it's in my area, right? So anyway, the market, nice little drop down in the morning. In my opinion, the Dow Jones versus all of the other instruments was the better instrument to trade for the way that I like to trade, because the other 2 instruments, as you'll see when we get over there, they never really had an aggressive dip. They pretty much dipped a little bit, but they stayed at the highs basically all day. The Dow Jones gave you opportunity because it displaced about 400 points, 400 points, and then it gave you an opportunity to buy back in all the way back up to the PM session highs. I didn't hold because, I mean, even if I would have held, I wouldn't have hit my target. My target was way up here to this 1 hour resistance zone. We just didn't have enough steam to get up there. But ultimately, the market traded down inside of every macro. But let's get down a little bit closer to the nitty gritty, and let's see if the market continued to follow structure, right? So we got this stair step up, this elevator down. So we'll pass through all of this and get right into the structure. We're looking for 950 to trade down to come up or go up to come down. You see 950, even though we're bullish down here because we're in discount. So I'm definitely looking for longs, which is why I got the long here. And I'm looking to see how we behave on the other side of 1010. Me and Valdez got this little joke, but it's true. If the market don't break the high by 1010 inside of the 1050 or the 950 macro, you got to leave, bro. You just got to leave, because if not, be ready for this pullback, which in the Dow Jones case is like a 100-point pullback, right? And then we trade up into 1025 and then we go lower, right? And I remember saying this to Jay Seals. I was like, yeah, now I'm looking for the market to run this low. He was like, you think it's going to come run that low? But I think he was talking about the S&P. And I was like, I sure do. And that's exactly what the market did. Inside of 1050, we traded down right into the 1125. And then I believe my account unlocked around this time. I was giving my son a bath and I seen it setting up. I was like, all right, one more dip and then I'm in. So we traded down into 1150. Got the consolidation that I love. I got long inside of this consolidation, expecting a run on the highs, and that's exactly what we got. Ran all the way up to 610, which probably should have been my profit target, but you know me, I be getting greedy sometimes. I'm not even gonna lie, right? But again, we traded down into 110, which lets me know that the market is still ready to be pretty much bullish. Whenever I see 110 bring the low and then the 3 o'clock price bring the high, usually we get tight consolidation for more upside, right? So that was the breakdown of the YM. Let's move over to the S&P 500. And before we pull up the chart, we'll look at Jay Seals' plan on the day. He says, bulls have not seen a dip they don't like. In fact, overnight ES has rallied and every pullback has been defended. It's very hard for me to be bearish for an extended period of time because of the bulls continue to defend. Bullish, as long as we are above the London lows at 6072, I want to remain bullish. I want to see very strong, quick pullback get defended, take longs targeting the daily fib at 6082, and then supply at 6109. If we rally into 6109, I want to look for sellers to defend or buyers to get trapped and look to short the market. Very clean, very, very easy to follow. We turn on these macros. He said he was looking for 672 and he wanted to see an aggressive dip into that level. So if you look right at the open, that's exactly what we got. 929.30. We aggressively dipped down into 6072. And I wanted to give a special shout out to him because I know this is something that he's been struggling with inside of his trading, which is he has 672 as the level, right? The market will trade past that level and then he won't take it because it traded past that level. Being a little bit too stringent on your area, you should just understand that it's an area, right? And understand if the market is in my area, I should be looking to trade it no matter how it's developed, because we have areas, but we never know how the delivery of price is going to go. So shout out to Jay for, conquering that on the day, right? So I believe he took longs. If I'm not mistaken, Jay, you can correct me if I'm wrong, but I think he took longs inside of the 942 candle. He got long at about 60.68, which was a dynamic entry. Rode it up into 682, which was his profit target. I think he got out at 682. He might have got out a little later, but ultimately it was a great trade. 18 points on the trade. So body bagged the market today, one and done, and continued on with the day. And we never got to 6109. So there was no reason for him to really be back into the market, to be honest. He could have came back inside a PM session and got basically the same trade at 672, which is what was directly off his pre-market plan, because the market went right there, right? And then again, rode it right back up to the same level. He could have took the same trade twice, and there was no real reason based off his pre-market plan to look to short the market yet, right? He was only looking for longs as long as we stayed inside of this range. So very good detailed plan and even better execution on the day. Shout out to Jay Seals on that one, man. So in regards to 950, we traded down to push up. And again, we just stayed range bound, guys. It's very important for you to identify these ranges. It's not to say you can't trade them. It's just to understand that that's what it is, right? So if you get long, you're in a range, right? And, I know some of y'all be having these, these FOMO ass entries, right? And you'd be like, fuck it, I'm gonna get long right here at 60.83. Okay, that's cool, but you're probably gonna sell when the market comes back down to 60.80, all right? Or you be trying to be a hero and be like, man, I missed this whole move, so I'm gonna get long 60.92. And guess where your profit target is at? 61 to fucking heaven, right? Your profit target is 61.23, and you're like, I'm gonna get long up here. It's like, bro, stop. The market's in a range, right? That shit's not gonna work when the market's not trending. And a lot of people fall in love with the previous price action and don't focus on the current price action. Friday's over, right? We're starting anew, right? We're generating liquidity. We're getting prepared for CPI, PPI, Jerome Powell testifying. The expansion overnight made sense, but so did the consolidation inside the New York session. Be prepared and have a full understanding of what the market is doing, and you will be a lot more successful, and you'll know when to walk away, right? When to pack it up, or when to go all in, right? Friday was a day you wanted to go all in. Today was not. Today was a day you wanted to be conservative with your poker chips, right? I recently been teaching my son Texas Hold'em, so if I do like, some references of Texas Hold'em, it's because I've been teaching him how to play it. It's honestly, today it played a real big factor in the way that I traded, because I thought about what I would do in Texas Hold'em, which is, I'm gonna save my chips because I know the market's gonna give me a hand, right? I just gotta wait for it, right? Anyway, going back to the NASDAQ, again, if you guys paid attention to the top-down analysis, now, I hate to say this, that yeah, I was right about the level, but I didn't participate in this move, so I'm not gonna brag about it per se, but I was right about the level, but the delivery of price was fucking insane. If you go to the 15-second chart, right? Like I said in the pre-market, in the top-down analysis, I said, hey, watch out for 21,450 to be the low of the week, right? But this is the 15-second chart, guys. Look at this gap on the 15-second chart. The market spent less than 15 seconds at this level. So unless you were in the market right at 6 p.m. on Sunday, which Pippy was in here. So unless you were here like Pip, you ain't catching this low, period. Right? Maybe we get another stab at the apple. Another bite at the apple by the end of the week. I'm not sure. Usually we get that higher low being placed on Tuesday. So I'll definitely be looking for that. But so far, the low of the week is 21,450 on the NASDAQ. And they came out of this motherfucker screaming. So when we saw this, immediately, what did I say when I came to the Discord? I said, hey, consolidation. You know what I mean? We got it. We got massive expansion inside of Asia, London, Tokyo. I mean Tokyo, Sydney, and London. Watch out for consolidation. And sure as shit, we got that one initial move pushing up to the high as far as they wanted to go, and then they just consolidated it. And this is a day when you got to count your chips or save your chips to place a bet for another day, right? On Friday, we had pocket aces. Today, we had 2-7 offset. You see what I'm saying? If you know poker references, you know what I'm talking about. This is not a hand that you really want to bet all the time, right? Like this, you could bet it, you know, but the probability of you winning that trade goes really, really far down, right? So again, volatility was fairly low. If we look at the volatility index, we can see that the market is coming back into this gap, right? But we did this low, took out these highs. So all of this is still bullish character, ladies and gentlemen. Can the market sell back down? Absolutely. But we're just still in this range. So we'll see if we can't get a little bit of a sell down tonight. And then I'm looking for some consolidation at the lows tomorrow. So the New York session, we can participate in the longs going back up. That being said, this is the market review. My name is T. Hobbs, and we'll catch you on the next one, man. Peace.